Ever feel like the more efficient something gets, the more we end up using it?
Yeah.
Like cheaper flights mean we travel more, right?
Right.
Or how about smartphones?
Oh, yeah.
They've gotten so affordable, yet we're glued to them now more than ever.
Yeah.
That's the Jevons paradox in a nutshell.
Yeah.
And it might just explain why everyone seems to be glossing over some serious risks in the current AI boom.
It's true. The financial media seems to have latched onto this
Yeah.
Jevons paradox idea as a way to kind of like soothe investors' anxieties.
Right.
Remember back on January 20th when DeepSeek launched in China?
Oh,
That was a huge deal.
huge.
Suddenly, advanced AI became accessible to pretty much anyone with an internet connection.
Oh, yeah. I remember
Yeah.
headlines were all, AI revolution is here.
Yep.
And Jevons paradox proves this is just the beginning.
Exactly.
But one analyst,
Yeah.
NYU grad over at notyouradvisor.com, is waving a big red flag.
Right. NYU grad is saying, yeah, hold on a minute. Everyone's focusing on the potential upside,
Right.
the massive adoption and growth.
Yeah.
But what about the potential downsides?
Okay.
They're pointing out that history is full of examples of what can happen when a disruptive technology hits the market,
Yeah.
and it's not always pretty.
Okay, let's unpack this.
Sure.
What kind of historical examples is NYU grad talking about?
Well, to illustrate this point, they start with the launch of the first iPhone.
Oh, wow.
We all remember that, right?
Oh, yeah.
Revolutionary device changed the world.
For sure.
But not everyone immediately benefited.
Right.
NYU grad uses T-Mobile as a prime example.
T-Mobile.
Yeah.
They're doing pretty well these days, aren't they?
Exactly.
Yeah.
They're a success story now.
Right.
But their journey wasn't exactly a smooth ride. When the iPhone first hit the market, T-Mobile stock actually tanked.
Oh, wow.
Plummeted from $50 a share
Wow.
to just $7.
Ouch.
That's an 86% drop.
It's a serious hit.
It is.
Yeah.
And it highlights what NYU grad is talking about.
Right.
These huge technological leaps,
Yeah.
even ones that are ultimately positive, can lead to some serious price corrections along the way.
I see.
T-Mobile stock did rally for a bit,
Okay.
but then it crashed back down to $7 again
Oh, wow.
when 3G and 4G started rolling out.
So investors who panicked and sold at the first dip ended up missing out on a huge opportunity.
Precisely.
Wow.
T-Mobile eventually rode the wave of the 5G boom and saw their stock price skyrocket over 3,333% from its lowest point.
Wow.
Yeah.
So where does Nvidia fit into all of this?
Well, NYU grad draws a parallel between T-Mobile's roller coaster ride
Okay.
and what could potentially happen with Nvidia. You see,
Right.
Nvidia is the leading supplier
Right.
of the chips that power all this AI development. They're pretty much essential to the whole operation.
Okay, so they're positioned to benefit massively from the AI boom.
Right.
But are they also at risk of a similar drawdown?
That's exactly what NYU grad is suggesting.
Right.
They predict that if Nvidia's stock follows the same pattern as T-Mobile,
Okay.
we could see it fall to $17 per share
Wow.
before potentially climbing to a whopping $566.
That's a huge range.
Yeah.
So what's more likely, a T-Mobile style success story or something less rosy?
To answer that, NYU grad dives into another historical example,
Okay.
the dot-com boom and bust.
Ah, the dot-com bubble.
Yeah.
That was a wild ride.
It was a period of incredible innovation and excitement, very similar to what we're seeing with AI today.
Lots of fortunes made and lost, I imagine.
Absolutely.
Yeah.
And just like today, there was a company back then that was considered the backbone of this new technological wave.
Okay.
Back then it was Cisco.
Cisco.
They were supplying the infrastructure for the internet, the picks and shovels of the internet gold rush, if you will.
So Cisco was kind of like the Nvidia of their time.
Exactly.
Yeah.
And just like Nvidia today,
Right.
everyone thought Cisco was going to be the biggest winner. And for a while they were.
Yeah.
Their stock price soared during the dot-com bubble,
Right.
but then, well, the bubble burst.
And Cisco stock took a nosedive?
It did. It plummeted over 90%. It took them 19 years just to get back to where they were before the crash.
Wow. Yeah.
And even for those who bought at the very bottom,
Yeah.
the return after 23 years was only about 1,075%.
So not exactly the life-changing gains people were hoping for.
Right.
But I guess it's still beat losing everything.
That's true.
Yeah.
But the real kicker is that
Right.
while Cisco struggled, other companies emerged from the dot-com wreckage as giants.
You're talking about companies like Amazon and Microsoft.
Right.
They weren't exactly household names back then.
Right. Amazon saw its stock drop.
Yeah.
a gut-wrenching 95% during the bust.
Wow.
But if you held on or were brave enough to buy at the bottom, you'd be sitting on a 14,900% gain today.
Wow. That's incredible.
It is.
I guess timing is everything in the market.
It certainly plays a role. And Microsoft, despite a 66% drop, went on to deliver a 3,200% return from its lowest point.
So what's the takeaway here?
Well,
not all tech companies are created equal.
Exactly. The dot-com boom, much like this potential AI revolution, created both winners and losers.
Okay.
And NYU grad's big question is, will Nvidia be the Amazon or Microsoft of the AI era, or will they go the way of Cisco?
That's a tough one.
Yeah.
How can you possibly predict something like that?
Well, NYU Glad suggests we look even further back in history for clues.
Yeah.
They take us all the way back to 1929 to the Roaring '20s and the rise of another revolutionary technology.
Okay. Radio.
Radio. Wow, that's going way back.
Yeah.
I bet people were just as excited about radio then as we are about AI today.
You bet.
Yeah.
Radio was the disruptive technology of its time. Right.
It promised to change the world.
Yeah.
And it did.
For sure.
But the company at the forefront of this revolution, RCA, had a stock performance that might sound eerily familiar.
Okay, I'm intrigued what happened.
Well, RCA did achieve success in the long run.
Okay.
But after the initial hype and investor frenzy, their stock experienced a significant drop. It's a recurring pattern we've seen time and again with these groundbreaking innovations.
So are we seeing a pattern here?
It seems so.
Every time a new technology comes along, there's this initial surge of excitement followed by a painful correction.
That's exactly what NYU grad and analysts at Seacard Associates are suggesting.
Okay.
Seacard Associates have been studying market behavior for decades. And they argue that history doesn't necessarily repeat itself, but it often rhymes.
Okay.
They've observed these recurring patterns, especially around the introduction of disruptive technologies.
So even though the specific technology and the companies involved might be different, the market's reaction follows a similar pattern.
Precisely.
Interesting.
And Seacard Associates offers a few more examples to illustrate this.
Okay.
They talk about the Nifty 50 in the 1970s.
The Nifty 50?
Yeah.
Refresh my memory on that one.
The Nifty 50 were a group of blue-chip stocks that everyone thought were one-decision investments. Buy them and hold them forever.
Okay.
Sound familiar?
It does sound a bit like the FANG stocks of today.
Yeah.
Facebook, Amazon, Netflix, Google.
Exactly.
They've been on a tear for years.
And just like the Nifty 50, their outsized performance has raised concerns about whether they've become overvalued.
Okay.
Seacard Associates also point to the dot-com bubble, where a small group of companies fueled by hype drove the market up while the rest lagged behind.
Okay, so what does all this history tell us about the AI boom today?
Yeah, that's the question, isn't it?
Yeah. Are we headed for another dot-com style bust?
Well, that's the million-dollar question, isn't it?
Yeah.
While no one can predict the future, NYU grad and Seacard Associates are suggesting that we should be prepared for a potential market correction.
So even though AI has incredible potential, history tells us there might be a bumpy road ahead.
That's the idea.
Okay.
Jevons paradox, combined with these historical patterns, suggests that while AI could generate massive growth, that growth might come with a hefty price tag in the short term.
And that price tag could be a significant drawdown.
Yeah.
Like the ones we've seen with T-Mobile, Cisco, and even RCA.
That's the risk we need to be aware of. It's not about saying a crash is inevitable, but about understanding that these patterns exist.
So what should our listeners be doing with this information? Should they be running for the hills and selling all their tech stocks?
Not necessarily. It's about being informed, being prepared, and maybe being a little more cautious. Remember, not all companies will win in the AI revolution. Some will thrive, some will struggle, and some might surprise us entirely.
So how do we figure out who those winners might be? It's like trying to pick the winning lottery numbers.
It's definitely a challenge.
Yeah.
NYU grad doesn't offer any guarantees, of course. But they do pose some interesting questions. For instance, will Nvidia, the current pick-and-shovel provider, actually come out on top? Or will they face a fate similar to Cisco during the dot-com era?
Right, because just being essential to the technology doesn't guarantee success in the long run.
Exactly.
So who else should we be watching?
Well, NYU grad suggests we think beyond the obvious.
Okay.
Remember when the internet first emerged?
Mm-hmm.
Nobody could have predicted Amazon's dominance?
Yeah.
They started as an online bookstore.
That's a good point.
Yeah.
Sometimes the biggest winners are the ones nobody sees coming.
Exactly.
Yeah.
So could it be Amazon itself that becomes the AI king?
Right.
They've already got their fingers in so many pies.
For sure.
Or what about Microsoft with their Azure cloud platform and their investments in OpenAI?
Microsoft has been making some big moves in AI lately.
Yeah, they have.
And then there's Google.
Oh, yeah.
They're already a leader in AI research and development.
Absolutely. And let's not forget about Apple.
Oh, yeah, Apple too.
With their massive user base and their focus on integrating AI into their devices. Mm-hmm. Plus, there's Tesla with their self-driving car ambitions.
Of course, yeah.
And Palantir with their expertise in data analytics.
So many possibilities.
A lot to consider.
It's almost overwhelming.
Yeah.
But I guess that's what makes this such a fascinating time.
For sure.
To be following the market.
It really is.
Yeah.
The AI landscape is still evolving.
Right.
And the winners and losers are far from decided.
So where does that leave us?
Yeah, good question.
What's the best way to navigate this uncertainty?
Well, NYU grad offers some simple but sage advice.
Okay.
Study history.
Right.
Those patterns we've discussed.
Yeah.
From the RCA bubble to the dot-com boom and bust, can provide valuable insights into what might happen in the future.
It's like they say, those who cannot remember the past are condemned to repeat it.
Exactly.
Yeah.
By understanding how the market has reacted to past disruptions, we can better prepare ourselves for the challenges and opportunities that lie ahead.
So the next time you hear someone raving about the guaranteed riches of the AI revolution, remember the lessons of the Jevons paradox, those historical patterns we discussed.
Definitely.
Remember that these groundbreaking innovations often lead to price corrections before they create lasting value.
Right.
And remember, the biggest winners might not be the ones everyone expects.
Very true.
And if you're hungry for more in-depth analysis and thought-provoking ideas, head over to notyouradvisor.com back.
Great resource.
NYU grad is a fantastic resource for anyone who wants to cut through the noise and make more informed investment decisions.
Absolutely.
It's a great way to stay ahead of the curve.
Yeah.
And understand the forces shaping the financial markets.
For sure.
Well, that just about wraps up our deep dive for today.
Great discussion.
I don't know about you, but I'm feeling a lot more informed.
Me too.
And maybe a little bit wiser.
Yeah. It's amazing how much we can learn from looking at the past.
Yeah, for sure.
Sometimes the future really does rhyme with history.
Sound like telling time? Stay curious.
Yeah.
Keep learning.
Absolutely.
And as always, happy investing.